Hey lovely people, it's Anthony and Marnus. We're back again with another market review. It's been a big week in Sydney, especially within the property scene. Is that right, Marnus?
Absolutely, Anthony. There's so much happening. The big news this week was the RBA capped the cash rate study at 4.35%. No surprises there. But wasn't really catching everyone's attention is the inflation drop from 3.5% in June to 2.7% in August. That's the lowest we have seen in 3 years.
That's unbelievable, Marnus. It's great news. It's now within the RBA's target range of 2 to 3%, while the other countries out there like US, UK, even New Zealand, they're cutting rates. Here in Australia, it's not looking like we'll get any relief soon.
Yeah, even Governor Michelle Bullock isn't budging. She's still concerned that inflation is too high, especially the underlying figures. It's interesting though, because there's a bit of political tussle happening. The Labour Party is pushing back, saying they are doing their bit to help with things like electricity rebates, but the RBA believes that that's just a temporary fix, not a permanent.
I definitely see that, and that's how it is. The rebates are set to end this year, so we could see electricity bills shoot up by nearly up to 50%. That's going to hurt a lot of households' pockets.
Absolutely, Anthony. And even with all that, traders are still betting there's a 70% chance of a rate cut in December. So it feels like there's a bit of a divide in where people think the market is heading.
I see, Marnus. And speaking of that, the market's direction, the Valuers General Sally Dale said the property values in New South Wales are expected to flatline next year. And after years of land value surges, it looks like we're finally seeing things level out a little bit.
Yeah, Anthony, you're right. People are definitely feeling the squeeze with the higher interest rates. Auction clearance rates last week in Sydney were only 45.5%. And out of 1,043 scheduled properties, just 306 sold under the hammer. It means that's only about 22% of the properties sold under the hammer.
Wow, that's a big drop there. And with the school holidays this week, we're likely to see a bit of pause in the new listings hitting the market. But really, there's only about 7 weeks left this year to list and also sell. So sellers are starting to think about whether to go now or potentially in the new year.
And with rate cuts expected in February, some sellers might hold off until then. Louis Christopher from ESM Research made some interesting points this week. Sydney's moving into more of a buyer's market. Sellers are getting more negotiable, and this could be a sweet spot for buyers before rates drop.
I agree with you there, Marnus. I'm definitely seeing that from the past couple of weeks. Right now, it's actually a great time for buyers. The market's balanced, sellers are flexible, and there's a lot less competition. Plus, buyers have a bit more time to explore wider regions and really think about their decisions these days.
Couldn't agree more with you, Anthony. This weekend's going to be really busy for us. We have got some great properties coming to market and few exciting auctions as well. It's a fantastic time to be out there.
Absolutely. In the peak of spring, looking forward to seeing everyone, especially this weekend. Catch you at the next Open. Let's have a party, Marnus.
You bet. Let's make it a big one.